Self-education and growth in financial knowledge can be achieved by starting with the fundamentals of money management and developing into a savvy spender. Saving and investing can be improved by dedicating some time to your financial education. For those who have the time, talent, money, and discipline to construct a long-term financial nest egg, you can take advantage of these resources. Your everyday spending and saving decisions should be guided by how you handle your finances. Keeping tabs on your finances necessitates a regular review of your spending and bank statements, as well as avoiding going over your budget. Getting one's finances in order begins with opening a bank account. Establish a direct deposit when you get paid. Keep your money in a savings account to avoid paying interest to cash advance companies that charge a percentage of your check. Having a bank account offers convenience, a wide range of perks, and security. Using a check or a debit card as proof of payment ensures that you know exactly where your money is going. This is yet another life-sustaining piece of information we will reveal to you in this video, so please make every effort to watch the entire video from beginning to end. This is Finance Advisor. In this video today, you will be exposed to the best financial tips and secrets every young star should adhere to be stinky rich in their 40s. Please stick with us as we move you on to the world of saving investments, huge returns that always flow like a spring. If you're new here, we welcome you and at the same time, officially invite you to join our adorable members. Kindly subscribe, click on the notification bell, and don't forget to smash the like and share button. Most importantly, your comment is highly welcome. Keep a savings account handy for those unanticipated costs and emergencies like a broken arm, a punctured tire, or an increase in the cost of school. Only opening one type of account, such as the current or savings, can be a bad idea because it can be difficult to discern between money for immediate use and long-term reserves. If you use a checking account for all your savings, they are easily accessible and available for spending without earning interest on savings accounts. Money in your account doesn't mean you can start spending it right away. Discretion is a must in this instance. Learn to distinguish between necessities and extravagances. Even if you have to pay for your annual dental cleaning, you still want to make time for the hairdresser's visit. Make use of mobile banking to keep track of your spending and account balances. The best way to leverage the cash you have in your bank account will be to start budgeting immediately. The ability to budget is one of the primary pillars of a sound personal financial strategy. It's simple to grasp but harder to put into practice since it takes taking a long, hard look in the mirror and being open to seeing what's truly there. To stick to a budget, you'll need to examine your spending patterns and, if necessary, make adjustments. Instead of being controlled by your money, you are in charge of it. Learn how to conserve money and avoid financial disasters so that you can preserve a sense of well-being. Making a budget. What's the first step? It's easy. Let's dive in. You need to find out where you're spending your money and where you're going broke. Here are a few steps to follow. 1. Starting tracking your monthly expenses. The next time you spend money, write it down in a notebook or an app on your smartphone. It's easy to forget about this, so make sure to keep track of it. This is where your financial plan will be built. 2. Decide which costs are fixed and which ones aren't. You cannot change some expenses, such as rent or mortgage payments and utility bills, which are known as fixed costs. Costs that change month to month are variable, and they include things like groceries, pet supplies, haircuts, concert tickets, and so on. 3. Sum it up. Calculate your average monthly cost after 3 months. The categories are also noteworthy. 4th, keep track of your varying costs. This is the area where most consumers go overboard with their spending. What is it about these monthly payments that make you feel like they're worth it to you? What are your essentials? Start cutting and be honest. The difficult choices are about to begin. 5. Take into account your savings. As part of budgeting, you should always put your own needs ahead of others. To put it another way, you should set aside a percentage of each salary for savings. You'll benefit from it for the rest of your life if you make it a habit. 6. Set a spending limit. Begin slashing your fixed and variable costs as soon as possible. Set aside a certain amount of money each week or every 2 weeks. You can only afford to survive on what's left over. Budgeting effectively demands being honest with yourself and developing a strategy you can stick to. When it comes to developing long-term saving habits, you'll benefit by spending more time and effort on your budget now. Entrepreneurs can overcome their financial difficulties by obtaining venture capital money from investors who want to profit from a portion of the company's long-term, high-potential growth. As a young company's size, assets and growth phase restrict it from rapidly growing. This cash can be a critical tool for handling starting costs. Many angel investors and venture capital firms will take a chance on a new product or service that banks are unwilling to fund because of the lack of a proven track record or collateral. To attract investors, a well-thought-out plan for the company's future must be presented. To increase your retirement savings, you should begin saving as soon as possible. The average life expectancy has been rising for some time now. There is an average lifespan of 78.74 years in the United States according to World Bank. Your savings and the amount of money you'll need to survive the rest of your life are both affected by how long you work and how long you live. Savings, investment portfolios, and even your employer can all help you plan for the future. Consider what you already possess as a resource. Starting a savings account at a young age is never a bad idea. Even though your bank may have accounts with low interest rates, you can use the decades between now and your retirement to build your savings. Setting up automatic transfers from your paycheck to your savings is one way to ensure you're saving for your golden years. Investigate additional options for funding your golden years. Calculate your monthly Social Security benefits with the help of the Social Security Administration's payment estimator. There's a correlation between your monthly Social Security payments and the amount of time you put off receiving them. Veterans, teachers, and other government employees may be entitled to pension income. What you get in retirement is highly dependent on your job and company. Make sure you know about and participate in any retirement programs your workplace gives. Keep an eye on the worth of your investments as you become older. As a result of low or stagnating investment returns, you might need to reallocate your financial resources. Older investors choose to put their money into bonds rather than stocks because bonds have a better chance of making them money in a falling market. If you fall behind in your retirement account deposits, you may also be eligible for extra catch-up contributions, which are normally more than the annual maximum. This guide can help you measure your savings progress. If you love the effort we put in here to create great content like this, kindly join us by clicking the subscribe button and activating the notification bell to be the first that will view our next interesting videos. Until next time, please write us your thoughts about today's video in the comment section below.